You're scrolling before the market opens, thumb hovering, coffee cooling beside you. And there it is, a post from a famous short seller, dressed like research. A ticker, a claim, a price target, a warning. This is how influence moves now, through a headline on X, a PDF with a logo, a viral phrase that sounds like certainty. You don't see the position behind the post. You don't see the exit order waiting in the dark. You only see the signal, and you move. That, according to the SEC, is where Andrew left and Citron Capital LLC turned trust into machinery. The SEC has charged Left and Citron Capital with allegedly running a multi-year $20 million fraud scheme, accusing them of publishing false and misleading statements about trading recommendations while secretly reversing their own positions after the market reacted. The SEC claimed that Left used Citron research and social media on at least 26 occasions to recommend long or short positions in 23 companies, with the targeted stocks moving more than 12% on average after his calls. The alleged trick was brutally simple. Tell readers to sell.
Buy back.
Tell readers to buy.
Sell.
The SEC called it bait and switch. Left has denied wrongdoing, but if found guilty, he faces up to 25 years. What happens when the person yelling fire in the market is already standing by the exit? For years, Andrew Left occupied a strange place in the Wall Street ecosystem. Part analyst, part activist, part executioner. Citron Research was not a sleepy research shop. It had theater, it had timing, it had language built to move people. And when it worked, it really worked. The legend begins with Valeant. In October 2015, Citron accused Valeant Pharmaceuticals of using specialty pharmacy, Philidor RX, in a way that evoked Enron-style accounting concerns. Bloomberg reported that Valeant shares fell more than 30% after Citron's accusations, while Yahoo Finance reported the stock dropped as much as 39% intraday before closing down about 19% near 1-1T team. You can almost feel that day through the screen. The pharmaceutical giant wobbling, investors refreshing quotes, television panels trying to metabolize one phrase: pharmaceutical Enron.
That was Left at his most powerful.
A short seller can serve a real function in the market. They can expose fraud, puncture hype, and force investors to ask questions they would rather avoid. In a bull market, skepticism is public service sometimes. But skepticism becomes something else when the crowd is used as liquidity.
Then came GameStop.
By January 2021, the market no longer belonged only to hedge funds and CNBC regulars. It belonged to Reddit boards, Discord servers, meme accounts, and retail traders who had discovered that coordination could feel like power. Left stepped into that arena with the old playbook. Citron said it would live stream reasons. GameStop buyers were suckers at this poker game and predicted the stock would go back to 20 very fast. Reports at the time placed GME around 41 when Citron made that call.
But the crowd didn't run.
It charged. GameStop became a cultural riot wrapped in an options chain, a rebellion where fundamentals mattered less than humiliation, and the short seller became the symbol. Left was no longer just publishing a thesis. He was in the story. He was the villain, the target, the proof that the internet could punch upward. The stock exploded. The old spell broke, and the government came calling. Because you are told the market is a place of opinions. Everyone talks their book, bulls promote shorts, attack analysts, upgrade influencers, post screenshots, CEOs, spin hedge funds, leak conviction through tone and timing. But there is a line between advocacy and deception. The SEC alleges Left crossed it by publicly presenting positions as if they aligned with his own trading intentions, then quickly reversing once followers helped move the price. The complaint also alleged that Left and Citron falsely represented Citron Research as independent. But the SEC says compensation arrangements with hedge funds existed. It asked whether modern market commentary is research or performance, whether a viral stock call is analysis or bait, whether followers are an audience or inventory. You see the tweet, you don't see the trade. That is the trap door. Valeant proved the short report could detonate a Wall Street darling. GameStop proved the crowd could detonate the short seller. The SEC and DOJ cases now test whether influence itself became instrument of fraud.